Good morning and welcome to the ADS Securities Markets Update. We'll start our video today with a look at the ECB decision, which came in with a disappointment yesterday, leading the euro to rally above 1.24 and the global stock to decline back. The ECB left the current policy unchanged. However, the ECB cuts the economic growth forecast for 2014 throughout 2016. Mario Draghi also hinted in his press conference yesterday that the ECB is ready to do more if needed, and the announcement of these new measures is possibly to be during the first quarter of next year. This is the main reason also behind the euro rally yesterday, as we noted in our central bank watch report yesterday, that if the ECB kept the current policy unchanged, then the euro may see some relief. However, the rally is likely to remain capped below 1.24 or 1 spot at 25 for now. After the press conference from Mario Draghi, rumors and reports from a source in the ECB noted to Bloomberg that the ECB prepared for a wider range of QE, which will be announced maybe in January's meeting, leading the euro to ease back below 1 spot 2360s, while the global stocks eased some of their declines. As for today, there are two economic releases during the European session today. In Germany, the factory order is expected to rise by 0.6% in October, comparing to another rise of 0.8% in September, which would be the second monthly increase in a row. In the Eurozone, the revised GDP is likely to remain unrevised at 0.2%. These are the only economic figures that we will be waiting for or will be released during the European session today. However, all eyes are on the US session, as we will be focusing on a collection of key economic releases from the US and Canada, which is likely to have the biggest impact on the market ahead of the weekend. Beginning in the US, or the US jobs report, the economy is expected to add around 231,000 new jobs in November, comparing to 214 new jobs in October, while the unemployment rate is expected to remain stable at 5.8%. Moreover, the average hourly earnings may rise slightly by 0.2% in November, after a rise of 0.3% in October, and any disappointment from the average earnings index is likely to spark a profit taking on the US dollar, as the sooner rate hike speculation by the Federal Reserve will be eased significantly. Moreover, the trade balance deficit also is expected to decline slightly toward minus 41.3 billion in October, down from 43 billion in September, which would be the lowest deficit in 2 months. Finally, the factory order is expected to show no growth in October, after a decline of 0.6% in September. Going forward to Canada today, the jobs report also will be released today, and the employment change is expected to add around 5.3 thousand in new jobs in November, comparing to 43.1 thousand in new jobs in October. The unemployment rate, unfortunately, is expected to go higher toward 6.6%, up from 6.5%, which would be the first monthly increase in 3 months. Finally, the trade balance, or this trade balance surplus in Canada, is expected to narrow slightly toward 0.4 billion in October, down from 0.7 billion in September. However, this would be the second monthly surplus in a row. Stay tuned today, as we will publish our monthly preview about the US jobs report and the scenarios or the impact from the US jobs report on the US dollar and other major currencies. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching, and have a good weekend.